If you guys have ever wanted to own the house of a famous YouTuber, well, now is your chance. In fact, this house right behind me is owned by Mr. Ryan Scribner. He has a successful financial channel on YouTube. He's a little over 700,000 subscribers now. You've probably seen a couple of his videos before, actually. I'm a subscriber of his channel. I watch it too. And I remember when he bought this house here in Miami, he's doing what he tells people to do, and he's trying to flip this house. He bought this house for $665,000 last March. Fast forward to today, he just listed the house for sale for $1,350,000. Looking to double his money in about a year and a half. So we'll see if that's gonna happen. He put it on his Instagram this morning, so I figure he doesn't care if it gets publicized, especially if it helps get the house sold. So anybody wanna buy this house, it's for sale. And you can own famous YouTuber's house. And it comes with the dilapidated house right next door too. So if anybody buys the house, make sure I get my cut, guys. You first heard it from me. They don't even have a for sale sign in the front yard yet, but it's listed on Zillow. Now, anyone who's been watching for a decent amount of time might have heard me say in the past that as we get deeper into this recession, you're going to see more lenders tighten up on lending. We already saw it a couple weeks ago, starting with credit cards, and now this week we're starting to see it with mortgages. In fact, the days of being able to put down 5% or 10% on a mortgage are quickly going away, guys. The lender, Virgin Money, has pulled its 5% mortgage loan away from customers this week, and they're continuing to monitor market conditions, and probably a lot of other lenders are going to do the same once you start seeing some that are afraid of what's going to happen. And why do you think they're doing this? Well, they're doing it for two different reasons. The first and the main reason is because they know, basically for sure, that any house that they lend on right now, if people are only putting 5% to 10% down, within the next year, that home is going to have negative equity. And the banks don't want to be a part of that. They don't want to have an ownership stake in a house that's essentially underwater. So probably following suit, you're gonna see a lot of banks completely change their lending standards, and I'll bet that most banks are probably going to start requiring 15 to 20% down if they start following suit of Virgin. And the other reason that they're doing this is because the lower amount that people put down, then typically that's a higher chance that they might end up defaulting on the mortgage if they do go underwater. So it's a double whammy from the lender's perspective of, hey, maybe we should watch out and not be lending to people that really can't afford a high down payment right now. And I predicted that this was going to come, guys, and here it is. This is just one lender right now, but there's a high probability that others will follow suit because of this situation. And they're predicting on the low end, prices will probably be going down 9% next year, but they're saying worst case scenario, 30%, guys. That's a pretty big buffer zone between 9% and 30% that they're predicting that prices could go down. And so you're going to be lucky now to even get a mortgage from places if you put 20% down, if more lenders start doing this. So you can expect over the next 12 months, more lenders starting to tighten up their standards and probably not be doing these high loan to value ratio loans for the time being while they watch the market and see where things go into 2023. Starting to see a lot of houses pop up for sale over here in this area. Apparently, everybody just wants double now. This is yet another flip. They've only owned this place for 2 years, bought it for $912,000, and now it's listed for $1.9 million, and it's being basically marketed as a vacant lot. The house is so terrible, you need to just tear it down and build a new one. And it's not just banks and mortgage lenders who are taking note of the market turning around. It's also real estate investors. In fact, real estate investor home purchases fell 30% year over year in the third quarter of 2022. So that's a pretty significant decline. Obviously, that means there still are people out there investing in real estate, but not nearly as many. You have 30% less. And right away they tell people, well, this is great news if you're a home buyer because it means you have less competition, which actually is true. You do have less competition, guys, but the one thing that they forgot to mention is that you're still dealing with ultra high interest rates and ultra high home prices, and those two things combined right now are a death sentence. And yeah, sure, you have less competition, but if you're not putting down a 20% down payment or maybe even more, you could be in a negative equity situation and you're going to have a very high mortgage payment. And I would say the only people that it makes sense for to buy right now is anyone who needs to move, essentially, for whatever reason, and buying is the more financially smart choice, meaning that it's cheaper than renting or it's close to about the same, and you can afford the down payment, you can afford a job loss and not have any income for 3 to 6 months, and you're basically set up financially, then maybe it's okay for people like that. But if you don't fit into that category, it's probably not a good idea. Another house is just totally run down. You can tell it's totally abandoned. It's a shame too, because it's a pretty big lot, big yard, nice palm trees on the water. And I don't know how people can just let these places just rot like this, guys. But that's part of the reason that the values here are going up so much. You know, people buy these old, dilapidated houses in this area, you know, just like we saw Ryan's house in the beginning. And, you know, they turn it around and they ask double because they're the ones that took the time and effort to flip the property, and they want their monies back and then some. And people will pay. I just don't know how they're getting the appraisals to come in on these properties, because if people aren't paying cash, it's pretty much impossible to get a loan on something like that. You know, the property going up double value in just 18 months is basically not really realistic from an appraisal standpoint. And you got to think, most people who are flipping properties, the end user who usually buys it is someone who wants to just have a turnkey house and live in the property, and 9 times out of 10 that person's going to have a mortgage. So how they're going to get the appraisals to come in on properties like that is beyond me. Now, I'm not going to go over the whole story and all the detailed numbers of how many investors are investing right now versus how many are not, but the fact that it's 30% down year over year is definitely something to take note of. But surprisingly, a lot of real estate investors are still bullish on Florida, guys, and I'll bet that Ryan's going to get that house sold. In the third quarter of 2022, almost 30% of the homes purchased in Jacksonville, Florida were from investors. Almost 30% purchased in Miami were from investors. And pretty much the same thing in Orlando. It was about 26% of the homes sold were investors. So it is absolutely crazy the amount of real estate investors that are basically propping up the market here in Florida right now. And you can pretty much guarantee, guys, if it wasn't for so much investment activity here, we wouldn't be having these massive run-ups in real estate prices here in Florida. It just wouldn't be the case. And it's no doubt that this level of investor activity is greatly contributing to the real estate prices here. I mean, if he can actually sell this house, which is right back there too, by the way, for double a year and a half later, good for him, guys, because that's like the greater fool theory, right? Somebody else is willing to come take that property off your hands for double what you paid for it 18 months ago. Well, joke's on them, right? I don't feel bad if you do that, because, you know, you're fully aware that the house sold for $665,000 a little over a year ago, and if you think it's worth paying $1.3 million today, then that's on you. But look at what this real estate agent said that they interviewed for this article. Almost all of my listings right now are people looking to sell investment properties or second homes. They want to get rid of them now while they still have some value, because they're scared there's going to be another big crash. And just like our friend Ryan back there, he's probably thinking the same thing. Well, I flipped this house, I better get rid of it now while I can still maybe get this price, because in a year from now I probably won't be able to, because I would think somebody like him would probably want to wait a little extra longer, you know, at least 2 years, and pay a lower amount in capital gains taxes. But right now, getting the highest possible sale price is probably the priority over paying lower capital gains taxes, is my guess. So, you know, you can see all of these investors trying to do the same thing right now, guys. They're all trying to get out of this market while they can. You're seeing a lot more listings come on the market, especially here on my walks. I'm starting to see more and more of them now. It'll be interesting to see who is going to be the bag holder in all of this, because the interesting thing is that even though the investor activity here is up, it's also falling at the same time, which is kind of a paradox. Is kind of a hard thing to really grasp. But overall, residential closings in South Florida in particular are definitely falling, guys. In South Florida, we've also seen a 30% decline in the amount of sales year over year as well. In Miami-Dade, the amount of closed sales are down 31% in October, and Broward, they're down 25%, and in Palm Beach, it's down 31%. So those are pretty significant declines in the amount of homes sold, but the flip side to it, of course, is that everything that is being sold is significantly more expensive now than it was a year ago. Like in Miami-Dade, for example, the average single-family home is up about 17% year over year in price, and Broward County, it's up about 10% year over year in price, and in Palm Beach, it's up about 14%. So overall, people are still making money on these properties, even if they have lost some and had to take big price cuts recently in order to get things sold. But when you're seeing these type of gains in just 1 year, it's no wonder we're seeing all these investors that are still trying to cash in on this right now. By the way, happy Thanksgiving to everyone who watches the channel. I hope you guys are going to have a wonderful holiday weekend and hopefully not spend too much on Black Friday. Don't go into credit card debt. If not for me, for yourself. Here's something to think about. Over the Thanksgiving weekend, there was a lawsuit in LA County from a large corporation that owns 12 buildings, and they were trying to sue the city of Los Angeles because of rental moratoriums there are insane. I think it's one of the only places in the entire country where they actually still have rent moratoriums in place, guys. That is insane. And they're trying to sue the city for $100 million. The judge actually ended up ruling against them, and he ruled against them because he said that the eviction ordinance covers only a limited period of time and did not reflect a permanent seizure of property, which would have required landlords to be compensated by the city. So because it's only temporary, that the judge threw it out. But meanwhile, this landlord hasn't been able to collect rent for like 2 years, and they've already lost $20 million in rental income. So they're saying that's not really significant enough for them to get a winning in this lawsuit, guys. So that's just insane. I mean, to me, when I see things like that, that's just like the reason to never own rental real estate in California. I probably never will. I don't see why anyone would at this point. When you're looking at this as a landlord, who cares what you can charge in rent over there? Doesn't really matter, because the tenant can just not pay, and in the end, you're the one footing the bill. And check this out. This is what's going on over there right now. People who can't pay the rent due to the pandemic cannot be evicted for at least 12 months after the local emergency period expires. Once the moratorium ends, tenants will have an additional year to pay past due rent, and the ordinance bars landlords from charging interest or late fees. So not only do they have to sit there and not collect rent, but once they actually can collect rent, they can't charge them anything extra. And who are they kidding, guys? Do they actually think that these people are going to be able to catch up and pay what's owed to them after a year or two of not paying rent? That's a dream, and it's not going to happen. These guys are not going to be able to catch up. They'll be lucky if they get another month or two out of those people, if anything. So the fact that they think that they're going to catch up and pay a year or two's worth of back rent is a complete joke. And basically, they're trying to sue the city because they're saying that they've had their Fifth Amendment violated, which is something called the Takings Clause, which requires just compensation when private property is taken for public use. So the fact that they didn't win this one is just unbelievable to me, because it's temporary. Like, so what if it's temporary? You're permanently losing money, not temporarily. The city's not going to come in and pay the extra money that these people lost. I obviously understand it's a big corporate landlord. A lot of people can say good for them, these guys are greedy, they're losing all this money. But remember, guys, this is happening to regular mom and pop landlords too, not just big corporate landlords either. This is just, a headline in the news and a big example of it, of a firm that actually has the money and the legal resources to take on the city and actually lost. So think of all the mom and pop landlords that don't have those resources, that have just had to lose the money. But they say that landlords in Los Angeles are entitled to receive rent relief for the back rent owed by tenants. But by who? Who's paying that, Is the city of Los Angeles going to come in and pay this landlord $20 million? I don't think so. And if they do, who's really paying for that? That's right. the taxpayers, the hardworking people of Los Angeles who actually have a job, who actually pay their taxes, and are going to be punished from these ridiculous policies that are in place. I mean, let me know what you guys think about that. I think it's totally insane. What they're doing over there is criminal, and the fact that they still have this moratorium going is just sickening, to be honest. If you guys enjoyed this video, make sure you click the bell notification down below. YouTube will alert you every time I have a new video, and if you don't want to wait, check out my next video on the screen right over here, and I'll see you in the next one.